stock market hates uncertainty. Yeah. So when it's not clear what's going to happen with tariffs and what does that actually mean, stock market doesn't like that.
Yeah,
so
it doesn't like change.
Skittishness, and then that leads to uncertainty, which leads to a decline in stock prices. And yeah, just naturally getting back into more reasonable valuations is another thing to look at. Now, it doesn't mean it's going to be a bad year. We're not saying there's going to be a stock market crash. That's not what that means. It means there's likely to be a pullback that gets things back in a more reasonable line.
Yeah, and one of the reasons the market corrects is people take a breather, right? They pull money out of things that have done well and maybe sit on cash, or they rotate into something else that hasn't done as well that could be a buying opportunity. So back in December, we saw, industrials were down 8% in December, materials were down 12%, energy was down, I think, 14%. Real estate was down 12%, right? So there's areas of the market where the market was down in December, but we only felt about 3 or 4% of that pain because you're diversified, right?
Yeah.
So that's where we can step in and say, this is where we're trying to like pick our poison, if you will, right? We're going to we think there's enough valuation here. We think there's enough growth here.
And that goes back to what I said at the beginning is complacency. Like just because you got 25% each of the last 2 years doesn't mean that's what's going to continue. You need to be mindful of how you're invested. Make sure you're managing your risk. And that's certainly what we help with at Paladin. We tap into grading all the time for that help, but making sure you're rebalancing, making those adjustments, making sure when you have your equities, we're actually leaning in the right direction.